Hi, good afternoon. This is Lisa Neufeld with Remax Gold Real Estate.
Hi, and I am Patty Grissom with Guild Mortgage.
And today we're going to talk to you together about things that are happening in the market and a little bit on the interest rates. Right now, there's been a lot of buzz and media information where it's not always been good. That's why it's important to have a professional loan officer and a professional real estate agent. So technically, just to give you a little insight on today's market, things are calming down or cooling off, as they say, but our prices of the houses are a little bit higher than they were last year. So the market is still very strong. Our inventory is still very low. We're about 2 months in inventory, which means if we were to sell everything today or right now, we'd have about 2 months to do it. But when you start reaching about closer to 6 months of inventory, that's when it starts switching to more of a buyer's market. Right now, it's still somewhat of a seller's market. However, sellers are more motivated today, and they're also a little flexible. So there are some things that we can have the sellers help us do as we approach this market. The other thing is you've been hearing a lot about the interest rates being high. Technically, the interest rates are normal. They are where they were about a couple years back. I had in 2019 clients who were pre-approved at that time for 6.5% on the interest rate. What we had in the last 2 years where interest rates were in the high twos, low threes, that was just not a normal market. So things are adjusted. They're normal. Things are settling down. They're not going to crash. Your values are still good and still growing. So it's still a great time to buy. So what ways can we help our clients as they're looking to purchase a home, whether they're a first-time buyer? Most of them are first-time buyers, but if they are investors as well. But what kind of programs do you have to help today?
So there's a lot of programs that that are very detailed, but one of them that I wanted to discuss with you guys to help with the current interest rates increasing is our temporary buy down option. So what the temporary buy down option is allows you to still obtain a 30-year fixed mortgage and be able to reduce your interest rate for the first 3 years of your mortgage temporarily. That's why it's called a temporary buy down. So, for example, if your going rate on a 3% conventional loan is that means 3% down is 6.75. You're going to be able to reduce your payment on the first year that you own your home down to 3.75. We're going to calculate your payment based off 3.75. The second year, we're going to calculate it based off 4.75. And then the third year, we're going to calculate it based off 5.75. Fourth year, you go to the fully amortized rate of the 6.75. Now, anytime between year 3, or even year 4 and current year, you refinance. Typically, we're trying to hopefully within the next 2 years, you're able to refinance. Then, and the rates have gone down, then you have the opportunity to refinance and lower your interest rate permanently. So that's just going to help with the increasing of interest rates. The only thing is that the seller is the only one allowed to pay this for you. You're not allowed to pay it as a buyer. And Lisa, what do you think? What do you think about the market that we're in now?
Well, that's what I was saying, that sellers typically are motivated to where now they may help with some of that part of closing cost credit for the buyer and using that as helping with this rate buy down. Now, Patty, not to be confused, or some of us not to be confused, especially back in 2008 when there was a variable rate. How is this different compared to a variable rate? Because it's still a fixed rate, right?
Yeah, it's very different than the variable rate, because you're still getting a 30-year fixed loan at the 6.75, which is the example we use, but you're temporarily paying to buy it down for the first 3 years. So what the way you're buying it down in a sense is, let's just say year 1, each month you're going to save $300 a month by reducing your interest rate to 3.75. We're just taking the $300 and multiplying it by 12 and doing that for year 2 and year 3. So in a sense, you're prepaying your mortgage payment. That's how we do the temporary buy down. So it's still a 30-year fixed loan. You're not getting an ARM. You don't have to worry about your rate adjusting higher if interest rates go up, you're still going to keep that 3.75 in year one. It doesn't matter if interest rates have gone up.
And like I said, sellers will be more motivated. We're still low on inventory, but some of the sellers are motivated to help buyers out in achieving their home ownership by offering to help buy down that credit. It's not guaranteed, but it's something that sellers are motivated to do or can be motivated to do.
Yes, and we can definitely, all we can do is, try, and that's why you get a real estate agent that's going to help you negotiate a temporary buy down with the seller. It's definitely something that I think is helping in this market that we're in with the interest rates. And another thing that I like to say is, think of your interest rate, think of it as a marriage. Your home, you're marrying your home, but you're just dating the rate. You're investing in your home, you're investing in your stability of owning your own home, not worrying about whether your landlord's going to sell your home or not, or if your rent's going to increase in the next 6 months, because rents have increased, or your landlord decided you have a Rottweiler, a Pit Bull, a German Shepherd, and I'm just using examples because I have those breeds, decide that they don't want you in their house anymore because you own this animal. So when you own your own home, you don't have to worry about those things, and you invest in yourself and in your home. So you're invested, you're married to the home, but you are just dating the rate because you have the potential to lower your interest rate when interest rates do go down.
Yeah, there is no negotiation when you're renting. None of your money that you're putting aside or paying the landlord goes towards anything. It goes to the landlord's equity, but not your own. As you are paying into your own home, buying your own home, you're building equity. Not only as you're paying down your loan, your mortgage, but you're also building equity with changes of the market. As the housing goes up, so does your equity. And so it's there, whether you want it as an emergency fund, you need it to do some repairs or remodel, pay for school, something. It's there. It's there. It's one source of money that you have aside or can have aside to use when you're needed. When you're renting, you can't do that.
Yes, exactly. It's the stability. As you have when you own your own home, you have the stability of knowing that is your home, and you're not going to worry about getting there. Unfortunately, we see this. The landlord just has to give you, you've been living in the home and renting and paying your rent on time for the last 3 years. They just have to give you a 60-day notice.
Mm-hmm.
And yeah, we have seen that.
So during COVID, there was laws in place of that, certain things had to be done for eviction, which they really couldn't do any during COVID. But those laws are already reversed back to your normal tenancy laws. So a landlord, if you've lived in that house or whatever rental property, if you've been there, living there for at least a year, they have to give you 60 days. If it's less than a year, they can give you a 30-day notice.
Yes, that's correct. So there's a lot of programs out there for you, and the best advice that we could give you is to get educated and know your options. Start the process, even if you think you're not going to buy a home until early next year. Start the process now. Do a consultation. It doesn't cost you any money to consult with a local realtor and lender. That's what me and Lisa do. We will meet with you. You don't have to pay for your credit report to be ran, and know where you are. And make a plan for you and your family, and know what the future looks like and when you're going to be able to buy a home, but at least you have started with a plan.
Exactly. So being prepared, just planning whether you're ready today or 3 months, 6 months, a year, 5 years from now, is to have a plan. Have a plan. If you don't have a plan, chances are it's not going to happen. That's with anything. If you don't set goals or a plan, it's not going to happen. You can wish all day long, but until you have it written down, until you have it to where you reflect on it, it's not going to happen. And some of you guys have been listening, to a lot of the news, and we need our news to know what's going on, but some of it is a little excessive. You hearing different rumors about, market's going to crash and housing going to drop like it did before. It's not true. This is why you need to counsel with a professional realtor and a professional lender who does this, who has the experience. They can provide you the facts. That's what we're doing here today, is providing you with the facts. The reason why our housing market, especially here in Fresno, is not going to go down anytime soon is because there's working remotely is still in place for a lot of companies, and that's not going to change. It's going to stay that way. There's some employers who said that's better for morale, it's better for overhead, so they're doing that. So while that's in place, if you live in the Bay Area or you're working in the Bay Area, making Bay Area money, and you can live anywhere you want, especially if you're working from home, they're coming here. They're coming here and they're buying the houses here and driving our housing market up as well. Doesn't mean it's going to go down a lot where they're at, because there's always somebody willing to buy over there. But that's what drives our prices up, and our inventory is still pretty low. Tell us another program, Patty, that you have besides the buy down that's just came out from Guild.
So we, a few years ago, we had this program and we called it the 3-2-1 program, which we partnered with Home Depot on, and it is back. Literally, we just got it back. So this is hot off the press for you guys. And it's 3% down conventional loan. We can approve you with approval down to a 620 FICO score. And you're able to get up to $2,500 in closing cost credit to go towards your closing costs, and a $2,000 Home Depot gift card. When your loan closes, we basically hand you a Home Depot card that you get to go walk around Home Depot and spend on what you would like to spend it on for your new home.
So I understand that you're saying that this 3-2-1 program, they have some closing costs covered. They pay 3% down, and they get $2,500 from Home Depot to buy it for their stuff.
Yeah, so the buyer puts the 3% down, and then you get a lender credit of up to $2,500 for the closing cost, and then you also get the $2,000 Home Depot card.
And again, Patty has a lot of different options, and that's what her goal is, to go over all the options with you so you can choose what's best to fit you and your family's needs on what you're going to purchase, whether it be a condo, a townhome, single level, 2-story level house, even duplex, triplex, fourplex. Those count as single levels. Those usually pique a lot of interest for people. Be your first time home, but be an investor at the same time without paying the investor fees. So, these are a lot of great stuff to help you during this time. We're in October. I didn't even think about this. So if you get into escrow this month, or you close in in November. Well, you could have closed this month. But if you close in November, your first payment is not until January 1. Merry Christmas.
So that's still a good time to buy. And another thing to keep in mind is we have a lot of people from the reports and everything that me and Lisa read is they are kind of a little bit on the fence and have stepped back from the home buying process. And we see that through the end of this year. So it's actually a really good time for you to get into a home, because interest rates are not going to go down. They're just going to go up. They're projected to go up into 2023. And then when people realize
they go up and down, but it's not going to drastically go down like it did before.
Yeah. So we're thinking that early next year, when some of the folks realize, okay, wait a minute, I do need to get off the fence and get back into getting my home. That's when you're going to have more competition. So take advantage now in the fourth quarter that some people are seeing you on the fence. You get off the fence and you'll be able to find the right home for you.
And like I said, if you have questions, concerns, or you're unsure on anything about the housing market, the interest rates, contact Patty or myself, and we would be glad to go over that with you. Love to educate you, because again, the more information that you have, you can make a great decision for you and your family.
Yes. Education, planning, and getting a consultation is the key.
Yep. So thank you very much for joining us today. We look forward to talking to you some more.
Thank you.